As I'll mention throughout the retirement planning lessons, having control over taxable income sources often isn't appreciated until it's too late, especially once required minimum distributions, RMDs, from those pre tax retirement accounts begin. A lack of income control can affect numerous variables, including the taxation of Social Security benefits, investment earnings, and, as seen here, the cost of Medicare premiums. This combined income tax and Medicare chart displays the federal marginal tax brackets, including this column taxable income, which backs out the additional standard deduction for taxpayers over age 65, since that's when Medicare begins. The monthly premiums for Medicare Part B, medical insurance, and Part D, drug coverage, are determined based on income, specifically modified adjusted gross income. This number is determined by combining your adjusted gross income, AGI, and any non-taxable municipal bond interest. Higher income retirees with significant municipal bond holdings within taxable brokerage accounts are often caught off guard. You'll learn how to find these variables and calculate these numbers during the upcoming tax return lesson. Although the Medicare premium thresholds and income-related monthly adjustment amounts, also called IRMAA, are based on income from 2 years prior but not announced in advance, these charts provide conservative estimates moving forward, assuming no cost of living adjustments. And since your income this year could be lower than 2 years ago, the Social Security Administration allows various life-changing events, including retirement called a work stoppage or reduction, reported on Form SSA 44 to request a reduction in those Medicare premium adjustments. For example, if someone retires at age 65 and expects lower gross income moving forward, they don't want their Medicare premiums to reflect their previously higher income at age 63. Upon receiving their increased premium notice, they can submit this form, including estimated income and evidence of a life-changing event, work stoppage in the case of retirement. By having lower income and submitting this form correctly, annual Medicare premiums can often be reduced by thousands of dollars per person. I've included a link to the form below. This chart also shows us that the federal income tax brackets, 10%, 12%, 22%, and so on, are progressive, but the IRMAA thresholds have income cliffs. You could pay more for Medicare even if your income is just $1 over the limit. So when you're age 63 and up, which is 2 years before age 65, you'll need to determine whether going into these higher IRMAA tiers is worth it, based on the rest of your retirement strategy. Avoiding IRMAA usually should not be the priority, but it's important to be aware of its consequences. IRMAA is one of those good problems to have, meaning your premiums are increased, but are affordably within 2% of your annual income. For more information about Medicare and its various costs, Medicare.gov actually offers fantastic resources, including its Medicare and You handbook, which I've linked below.